welcome to the deep dive. If you're trying to, get a handle on something without wading through tons of stuff, well, you're in the right place.
Exactly. You, the listener, send us the source material.
And today, that's a really interesting transcript from...
And we pull out the key info, the insights, just for you.
So this time, we're doing a detailed exploration, a real deep dive into the financial life of someone named Sukanta.
Yeah, he's shared quite a bit. His income, expenses, loans, investments, the whole picture, really.
Right. So our mission here is to understand the complexities, see what's going on with Sukanta's finances.
And maybe identify some potential pathways forward for him.
Precisely. And what's great is looking closely at one person's situation like this. It often shines a light on things that can help, well, almost anyone with their own money management.
Absolutely. It doesn't matter what your specific numbers are, the principles often apply.
Okay, so let's dive in. Let's meet Sukanta.
Okay, so first off, where he's based. He's in Luting, which is a small city in Assam.
And his job?
He's a senior credit card executive at ICICI Bank. Been there since 2019.
So about 5 years experience then?
Yeah, something like that. And his family situation is pretty central to this.
How so?
Well, he's a single child, and he's the only one supporting his parents financially.
Ah, okay. That's a big responsibility.
It is. His father isn't well, and his mother's income is limited. She's a venture teacher.
Right, so maybe not a very high or stable income there. And Sukanta's been managing the household finances for how long?
For about 7 or 8 years, according to the transcript.
Wow, 7, 8 years. That's a significant stretch, especially, shouldering that alone. It really highlights something we often see, doesn't it?
What's that?
How supporting family financially can, well, massively shape your own finances.
Oh, absolutely. It puts different pressures on you. And he actually said he sought guidance because he felt stuck.
Stuck.
Financially stuck. Mentioned some wrong decisions and just general financial pressure. That's what led him to share his story.
Okay, that makes sense. So feeling stuck, that often leads us to look at debt, doesn't it?
Usually, yeah. And it seems he's juggling a couple of loans.
What are they?
First one is a personal loan, 2 lakh rupees from SBI. He took that out in 2023.
Okay, 2 lakh. Any idea what for?
Yeah, for home construction.
Right. And the payments?
The original EMI was 684 rupees per month for 36 months.
So a 3-year loan? How's he doing with it?
Seems like he's been paying it down quite well, actually. The outstanding amount is now only about 8,646 rupees.
Oh, okay. So he's nearly cleared that one then. That's good news. What's the other loan?
It's a credit card loan, also with SDI card, started at 1.5 lakh.
In the current balance?
It's down to 1.06 lakh now, so 106,000 rupees outstanding.
Okay. And the EMI on that one?
That's 422 rupees per month. He's been paying that for 20 months.
20 months in. So if we add those 2 EMIs up, 6,784, though that's almost done, and 6,422.
Uh-huh. The total monthly payout just for these debts is around 13,206 rupees, well, until that first one is fully paid very soon.
13,000 rupees a month just on loans. That feels like a lot, given what we might expect his income to be. Is that like a common scenario?
It can be, yeah. Especially when unexpected costs like home construction come up.
It really flags that issue of high-interest debt, particularly credit card debt, acting like an anchor.
Definitely. It just holds you back. No matter how much you try to save elsewhere, if a big chunk of your income is going straight out on past borrowing.
It just limits everything. Your ability to invest more, handle emergencies, just have some breathing room.
Exactly. Some early warning signs people should look out for. Maybe a high debt-to-income ratio.
Yeah, or finding it hard to make even minimum payments. Maybe relying on credit for basics.
And just that constant feeling of stress about the debt. That's a big one.
Okay, so clear debt picture there. Let's flip to the other side. Income, where's the money coming from?
All right. His base salary from ICICI is 14,000 rupees a month.
14,000 base. But you mentioned earlier he has other sources.
Yes, which is good. Shows resourcefulness. He gets about another 2,000 rupees a month on average from incentives at work.
Okay, so that brings his sort of regular job income up to maybe 16,000 typically?
Yeah, around 16,000 average from the bank job.
And then there was something interesting. Credit card arbitrage.
Mm-hmm. He's making about 2,000 rupees a month doing that.
Can you explain that briefly for anyone listening who hasn't heard of it?
Sure. It's basically using the discounts and rewards on his own credit cards for other people's purchases.
And then he takes a small cut, like a commission.
Exactly. He facilitates the transaction, passes on the saving, and earns a fee. It requires careful management, though.
I bet. What else?
He also has a side business doing insurance. Four-wheelers, two-wheelers, health insurance.
Oh, okay. How much does that bring in?
Another 2,000 to 3,000 rupees per month, typically.
So quite a few different streams then. Salary, incentives, arbitrage, insurance.
And he mentioned some other irregular income, too, maybe 3,000 or 4,000 rupees occasionally.
But if we focus on the steadier bits, the salary, incentives, arbitrage, insurance, what's the sort of stable monthly total?
You're probably looking at around 20,000 rupees per month from those more reliable sources.
20,000 stable income. Okay, now let's look at where that money goes besides the 13,000 in loan payments.
Right, expenses. First up, he's investing. He puts 3,000 rupees a month into an SP, a systematic investment plan.
Good. That's a positive habit, putting money aside regularly.
Definitely. Then there are his father's medical costs. That's about 4,000 rupees monthly.
4,000, that's a big slice and likely unavoidable.
Yeah, healthcare costs can be significant. Groceries are next, somewhere between 2,000 and 3,000 a month.
Standard household running costs.
Yeah.
Utilities.
Electricity and gas, about 1,200 rupees per month.
Okay.
Then personal expenses, he estimates around 2,000 to 3,000. And petrol for his scooter is another 2,000.
Okay, let's add those up. 3,000 SAP, 4,000 medical, say 2,500 groceries, 1,200 utilities, maybe 2,500 personal, 2,000 petrol.
If you add all those non-loan expenses, you land somewhere between 14,200 and 16,200 rupees per month.
Right, and this is where the core problem really hits home, isn't it?
It is. You've got roughly 20,000 coming in steadily, but you've got about 13,200 going out on loans.
And another 14,000 to 16,000 going out on essential living costs and his SIP.
Exactly. The math just doesn't quite add up comfortably. It looks like he's running very, very tight each month, maybe even a shortfall sometimes.
Yeah, it seems like there's basically no room for error or unexpected expenses. A very stressful way to live.
It absolutely is. But, it's not all bleak. Despite this squeeze, he has managed to build up some assets.
Ah, okay. That's important. Let's talk about those. That could be where the solution lies.
Potentially, yes. He's shown a real ability to save and invest where he can.
So what does he have? You mentioned the SIP.
Yes, the systematic investment plan. He's put in 88,000 rupees total.
Okay, and its current value?
It's actually around 1.06 lakh now, so
Yeah.
106,000 rupees.
Wow, that's a solid return. Roughly 20% over 2 years, he said, even with markets being choppy.
Yeah, quite impressive. Shows the power of regular investing, even small amounts.
Definitely. What else is in his portfolio?
He has about 90,000 rupees in post office deposits.
Okay, usually seen as pretty safe, low risk.
Right. And then there's his Provident Fund, PF, that's got 65,000 in it.
65,000? But he mentioned withdrawing some earlier.
Yes, he'd taken out 45,000 previously.
That PF money is usually for the long term, isn't it? How does that balance out when someone's facing immediate pressures like debt?
That's a really tricky one. PF is crucial for retirement, but you can't easily dip into it for today's problems.
So it's there, but not really helpful for the current squeeze.
Not directly, no. It's a balancing act securing the future versus managing right now.
Interestingly, what did he do with that 45,000 he withdrew from the PF?
He actually lent it out.
Lent it out. To whom?
Doesn't specify who, but he was getting a 2,000 rupee monthly return from it. And he used that 2,000 specifically to pay off a scooter loan he had.
Ah, I see. So he used the capital from his PF withdrawal to generate income to clear another debt. That's quite strategic, actually.
It is. Shows he's thinking actively about how to use the resources he has, even if it's unconventional.
Okay. Any other assets? Stocks.
Yeah, a small amount, between 13,000 and 15,000 rupees in stocks.
And gold. Often important in India.
Yes, quite significant. A gold chain worth about 70,000 rupees and a ring worth 30,000.
So about 1 lakh rupees in gold altogether.
A traditional safety net for many families.
And beyond just financial assets, didn't he mention something about social media?
He did. He's built up a Facebook page with 70,000 followers.
70,000. Is he making money from it?
Yes, he said it's monetized. He also has a YouTube channel, but it's inactive because he doesn't have time.
What kind of content does he make?
News, memes, entertainment stuff in Hindi and Assamese.
Wow. Okay, so that Facebook page, that's a real asset too, isn't it? Maybe not liquid cash right now, but potential for future income.
Absolutely. Huge potential there, especially once he gets the debt situation sorted. Shows the entrepreneurial side.
Okay, so that gives us a good picture of his assets. Now, what about his plans? What does he want to achieve moving forward?
Well, a key thing is finishing his house. He said it's about 90% done,
Yeah.
so getting that last 10% finished is a priority.
Makes sense. Get that project completed.
And generally, he wants to generate a more stable income and invest more for the future. He's aware his responsibilities might grow.
Understandable.
Well,
Any specific concerns he raised? Insurance came up, I think,
yeah, his personal health insurance had expired, and he knows he needs to renew it.
which is critical, being the sole earner.
Totally. And he does have an SBI life policy, but it's only 5 lakh cover and it's not a term plan.
Ah, okay. So maybe not the most effective life cover for his situation.
Likely not optimal, no.
So given this whole picture, the income squeeze, the debt load, the assets he does have, his future goals, what was the strategy proposed in the video to help him?
The core recommendation was really clear. Prioritize becoming debt-free, fast,
Get rid of those loans. How?
by strategically liquidating some of the assets we just discussed, more liquid ones.
Okay, break that down. Which assets were suggested?
First, the post office deposits. That 90,000 rupees.
Use that to pay down debt.
Yes, but with the caveat if there's no major lock-in period or penalty for withdrawal.
Right, because the interest he's paying on the loans is probably much higher than the interest he's earning on the deposits, yeah.
Exactly. So freeing up that 90K could immediately knock a big chunk off the debt principal. That makes financial sense.
Okay, what next?
The money he lent out, that 45,000. Recall that.
Get that cash back in hand.
Even though it was generating 2,000 a month, getting the 45,000 lump sum back now to kill high interest debt is likely more beneficial overall.
Okay, makes sense. What else?
Selling the stocks, that's another 13,000 to 15,000 rupees.
So with PO deposits, the loan amount, stocks.
Hmm.
That's 90 plus 45 plus maybe 15, about 150,000.
Around that, yeah. And the total outstanding debt was about 1.85 lakh, remember? 106K on the card, about 8.6K on the personal loan. Wait, sorry, the personal loan was almost done. Outstanding was 8.6K. The credit card was 1.06 lakh. So total outstanding is more like 1.15 lakh. My mistake earlier calculating the total debt. Let me recheck the source.
Ah, okay. Good catch. Let's clarify the debt numbers again. Personal loan outstanding,
Yeah.
8,646. Credit card outstanding, 1.06 lakh and 106,000.
Right, so total outstanding debt is roughly 8,646 plus 106,000 equals 140,646 rupees. Let's call it 1.15 lakh for simplicity.
Okay, 1.15 lakh total debt.
Yeah.
So that 90K from post office, 45K from the loan he gave out. That's 135,000 already. That would cover it?
Yes, exactly. Actually, original source material did suggest liquidating some mutual funds too, about 25K, to cover the original higher assumed debt total. But with the corrected debt figure of 1.15 lakh,
He might not even need to touch the mutual funds at all, or maybe just a very small part.
potentially yes. Liquidating the post office, 90K, and recalling the loan, 45K, gets him 135K, which is more than enough to clear the 115K debt. He'd actually have about 20K left over.
Wow, okay. So the core strategy is use those readily available, lower returning assets, PO deposits, the personal loan he made, to wipe out the high interest debt, credit card loan, remaining personal loan.
Precisely. Get rid of that 1.15 lakh burden entirely.
And the outcome. He becomes completely loan-free.
Yes. And think about the assets he still has.
He'd still have the gold, 1 lakh, the
Right.
mutual funds, 1.06 lakh, the PF, 65K, and maybe even that 20K cash left over from the liquidation.
Exactly. A much healthier balance sheet. And crucially,
Impact on his monthly budget. That 13,000 rupees in EMIs just vanishes.
it's freed up entirely. That's huge. Over 13,000 rupees extra cash flow every single month.
That transforms the situation from barely scraping by to actually having breathing room.
Absolutely. And the recommendation that followed was key. Don't just let that freed up cash disappear.
What should he do with it?
Reinvest a large chunk of it. The suggestion was to put, say, 8,000 rupees of that freed up 13,000 back into his SIP each month.
So add 8,000 to the 3,000 he's already doing.
Yes. Bringing his total monthly SIP investment up to 11,000 rupees.
11,000 a month going into investments after becoming debt-free. That really accelerates wealth building, doesn't it?
Massively. It highlights how getting out of debt lets you switch focus from digging out of a hole to actually building something for the future.
It really underlines that point about being loan-free, especially when you're younger like Sukanta. It lets you focus energy on increasing income and investing consistently.
Reduces stress, creates options, it's a powerful shift. And yes, there's a trade-off. Liquidating assets means they can't grow anymore.
But the argument is that the guaranteed saving from eliminating high-interest debt, plus the psychological relief, outweighs the potential lost growth on those specific assets in the short term.
especially for the post office deposits and maybe even the lent money, where returns were likely lower than the loan interest anyway. For the mutual funds, if he did need to sell some, that's a harder call, but clearing the debt was seen as the priority.
And it wasn't suggested he stop investing forever in those things, right?
No, not at all. Once debt-free, he could absolutely restart post office deposits or stock investing if he wanted to, using some of that freed up cash flow. He's already proved he can save.
And the performance of his existing SIP shows his investment choices weren't bad either.
Right. It validates sticking with disciplined, long-term investing. The final piece of advice was about insurance, wasn't it?
Yes, the life insurance, given he's the sole provider.
The recommendation was strong. Consider getting a proper term life insurance policy, a big one.
How big?
Suggested coverage was 1 crore rupees, lasting until he's 60.
1 crore. That sounds like a lot, but for term insurance, especially at his age.
Exactly. At 28, the estimated annual premium was only around 7,000 to 8,000 rupees.
That seems very affordable for that level of peace of mind for his parents.
It's a crucial safety net when you have dependents, a really important part of responsible planning.
Okay. So, wrapping this up, our deep dive into Sukanta's finances really shows, well, a few key things.
The heavy weight of debt, definitely, how it squeezed his monthly budget.
But also the potential sitting in his existing assets, even if they weren't immediately obvious.
And a clear strategy emerges. Tackle the debt head-on by using some of those assets.
Liquidate strategically, become loan-free, and then redirect that freed-up money aggressively back into investments like his SIP.
It's a path to turn things around quite significantly.
And I think a really important takeaway here for you listening is just how vital it is to know your own numbers in detail.
Oh, absolutely. Sukanta tracking his income, his expenses, his debts. That awareness is step one. You can't make good decisions without it.
You really can't. And, despite the tough spot he was in, he'd already taken positive steps.
Yeah, multiple income streams, starting investments, that initiative is a great foundation. He wasn't just passive.
Definitely not. So this detailed look at Sukanta's situation leaves us with a thought, really. A question for you, the listener.
What's that?
What is one financial burden in your life? Maybe it's big, maybe it's small. If you could just lift it, if it was gone, how much mental energy, how much financial capacity would that free up? Enough to let you focus more on your goals, on growth. It's really worth thinking about, the power of simplifying, of removing those obligations that weigh you down.
That's a great question to ponder. What could you achieve with that extra space?